Hello everyone, welcome back to the channel. So today, I just want to talk a bit about the stimulus and why it's not affecting any of my decisions that I'm making. And if you like fun videos on gold and silver, please like, share, subscribe. I do upload videos basically every single morning. They're pretty much all premieres, so come hang out with everyone. It's an awesome group of people to come hang out with. And stay tuned for the 500 subscriber giveaway. There's going to be a lot of fun pieces in that. And take the second to make sure you like, subscribe if you do like fun videos on gold and silver, coins, macroeconomics. And I'll get right into it. So, with the $900 billion stimulus bill, that brings the total kinda aid or whatever. We had the CARES Act earlier this year. Another big boost in money supply there. And it's kind of getting to the point for me where this is just a drop in the bucket. We've already had double this. We've already increased the M1 money supply by over 50%. Talk about crazy rates of gain when you're talking 50% M1 money supply increase. My goodness. Total M1 money supply is up over $6 trillion now. We start off the year below $4 trillion. That's over 50%. That is a wow kind of situation already. And now we have this bill getting passed, and it's really not affecting many decisions because it's a drop in the bucket. We all kind of already knew what was going to come once they agreed on a figure. Many people before that, I wasn't really buying into it until they agreed on the figure. Then I kind of, okay, this is going to happen. I don't doubt it at all. That's just my thoughts and the way I saw it leading up to it though. But people have already factored all of this in. We're getting, like, markets are reacting to any bit of news. They'll factor the same thing in 5, 6, 200 times. We lead to these, we're printing more and more money. We get these massive asset bubbles when we get that equation. Because it's the immediate news that seems to be driving the markets. It's not logic, it's not what actually matters. People seem to just be focused on the day-to-day news, not really looking at the bigger picture right now. And every little bit of news seems to have a big reaction to it. All of 2020. And we're seeing reactions that are big as small now because of every other reaction this year. We're getting, any time you get like a over 100 point swing in the Dow Jones, I see that as a big movement. It's starting not to seem like a big movement after 2020, but that's a decent sized movement. That's a normal day in 2020. There's always going to be news, and if people are factoring in the same thing 500 times, I tend to stay away. I see that as a big bubble waiting to pop. We're having the Dow Jones up over 30,000 points. That is a massive rise in the Dow Jones. We're seeing new, it seems like once a month, once every couple months, we're seeing new highs reached. It's pretty crazy to see that going on for me. Now, as I'm filming this, we're actually not getting a huge price movement right now, but we're still seeing 0.25% swing in the NASDAQ. NASDAQ's almost up at 13,000. We all know what happened with the NASDAQ bubble. Everyone's saying, oh, there's a lot more justification to this, but when companies are going to end up taking over 1,000 years to pay itself off, your investment, that's pretty bubblicious to me. Just my thoughts, just my opinions. I ain't a financial advisor, I'm just a random guy on the internet. Sharing my thoughts on why the stimulus is not affecting any of my decisions at all. And it's basically, how do you not prepare for inflation, a big rise in money supply, everything like that, with everything else that we've already seen? I've kind of taken up a position for this already. I'm not too worried about, oh, I could have made a little bit more, I could have saved a little bit more and everything. I'm just kind of sticking with going with the flow, sticking to my plan. I always revert back to sticking with the plan, unless things are crystal clear on why to change it. Otherwise, I'm going to end up making emotional decisions here, there, and everywhere. It's not going to really be a plan if I do that. And because I've already planned for a bigger increase in money supply, because I've already taken a hedge against the dollar, I've already prepared for a very inflationary environment, let's say. I'm just not reacting to this at all. I'm already in place for it, let's say. And I'm not going to get emotional and do anything different just because a little bit of news came out that we were kind of all expecting to begin with. That's just my thoughts, that's just my opinions. I'll say it once again, I'm not a financial advisor. But that basically sums it all up. Stay tuned for the 500 subscriber giveaway that I'll have going on here. There will be a lot of fun pieces in that. But that's all it really boils down to, though. And yeah, I hope you guys enjoyed. Stay positive. See you next time. Thanks. Bye.